Talking taxes this morning and Joe Biden's plan to tax capital gains because there's no malarkey in this one. Robert Frank joins us now with more. Hey, Robert.
Good morning, Joe. Well, the centerpiece and, of course, the biggest moneymaker in Joe Biden's tax plan is raising the tax rate on capital gains. Now, for those making more than $1 million a year, he would bring the top rate from 23.8 to 39.6. That would be the highest rate since 1978. Now, the question for investors is how a near doubling of the capital gains rate would affect stock prices and, of course, markets. Now, history shows there are big sell-offs before rates go up, but then ultimately rates don't drive the markets. Now, in 1987, you might remember the top rate went from 20 to 28%. There was a lot of selling in 86 leading up to that tax hike, with capital gains revenues doubling just in that year. Now, the market, though, remained strong. We had that crash in 87, but then they resumed their upward climb. Now, we also look at 1970. That's when capital gains rates went from 27.5 to 32.2%. Once again, you had a lot of capital gains sales surging right before that hike. But then 1970 was actually a good year for stocks, and that continued up for another 3 years. Now, there has never been an increase as high as Biden's. If you live in New York, New Jersey, or California, your combined state and federal tax on a capital gain would be more than 50%. And Biden would also eliminate the step-up in basis, which we've talked a lot about on this show. That allows people to avoid any appreciation on stock they hold until death. Those two plans, the capital gains increase combined with a step-up, would raise $1.2 trillion over 10 years. Also mitigating this is the fact that pensions and foreign governments own a lot of stocks, so they're not subject to the tax, so they wouldn't be forced to sell or want to sell before an increase.
Can I just point out, though, I mean, you mentioned that there's never been an increase like this, but the ones that you were talking about in these past years, it was an increase of maybe 8 percentage points or 5 percentage points. You're talking about 20 percentage points moving up, doubling the rate. Has anything like that ever been tried?
Not on a sort of total rate hike basis. We have had rates this high. I was interested to learn in the 1970s, we had capital gains rate above 39, almost 40%. So we've had rates this high.
But they came from where? Because part of it's the delta, right?
Exactly. And that's the big point. It was sort of a gradual increase from 34, 35, 36 all the way up. Never just from, 23 to 39.6 is almost double.
I mean, I just think about it. If you're a long-term holder, maybe what you would do is sell now and even buy the stock back so that the gains that you're not then measuring from that point would be, okay, you may be paying higher gains, but on much higher capital gains rate, but on a much smaller gains if you've been holding it for a
That's right. Time. And that's exactly what I think we saw in 86 and 70, where it wasn't that people just exited the market. They just sold, reduced the gain before the increase, and then they came back in the market. So it doesn't really affect, it does affect revenues and total capital gains sales, but it doesn't affect the overall market because, to your point, they come back in.